Hi and Assalamualaikum. My name is Hazi Ilman. So today, our group will present to you guys about national income.
Hi everyone, my name is Rania Florian.
Hello everyone, I'm Auni Wardiah binti Fendi.
Hi, Assalamualaikum. My name is Nafalia binti Ahmad.
Assalamualaikum warahmatullahi wabarakatuh. And hello, my name is Muhammad Nazwan bin Sapri.
Hello. Hey, oh, catch up lagi. See.
Hello everyone, I'm Auni Wardiah binti Fendi, and for my part, I'll be explaining what is national income and the key features of it. So firstly, what does national income means? National income means the total market value of all market goods and services produced by a country's resident during a given period of time. There are two ways to count the national income, which is the first formula and the second formula. Next, gross domestic product, or also known as GDP. GDP is a measure of the production of goods and services in a country in a given year, no matter by whom they are produced. So, GDP is the market value for goods and services. There are three ways to measure GDP, which is product approach, expenditure approach, and income approach. So, how do we count all of these approaches? Firstly is product approach. This is by adding all the value of final product or services. Income approach is by adding all various types of income, and expenditure approach is by adding all expenditure on goods and services for a year. So, what is market value, you might ask? Market value means the most probable price which a property should bring in a competitive and open market under all conditions requisite for a fair sale. Gross National Product, or GNP, is a measure of the production of goods and services by the citizens of a country, no matter wherever they reside in the world. Market price is the current price in the market through the forces of supply and demand. And factor cost is the real prices that is earned by the producers or sellers. Net National Product is the market value of the net output of the final goods and services produced by a nation during a year. So this is the formula to count net national product. National income at factor cost is the total of all income payments made to factors of production. Personal income is the income that is actually received by individuals and households in a nation during a year. So how do we count personal income? This is the formula for it. Lastly is disposable personal income, which is the part of personal income that is left after personal direct taxes. This is how we count disposable personal income.
Moving on, I will be explaining of the methods to measure national income because it can be measured in three ways, which is total output, total income, and also total expenditure. So in this method, national income is obtained by adding up all the expenditure used on services and goods in a year. According to this approach, national expenditure is made up of four sectors, namely personal consumption, which we will refer to as C, investment as I, government spending as G, and net exports, which is X minus M. So the first sector that we will be looking at today is personal consumption. Personal consumption includes the purchase of goods and services by firms, individuals, or households. For example, laptops, shoes, compact disc, obtaining legal advice, or even paying your insurance premium. However, do take note that the purchase of stocks and bonds by individuals or whoever are not included in personal consumption. The second sector is investment. Investment refers to the purchase of capital goods by firms for use in production and also changes in the firm's inventories. Inventories, on the other hand, refers to the stock of raw materials, semi-finished products, and also unsold final products that has been retained by the firms in over a year. Moving on, we shall be looking at the third economic sector, which is government spending. The definition of government spending is the expenditure incurred by federal, state, and local governments for final products and services. Some of these purchase of goods and services includes providing national defense and also construction of new buildings such as schools or hospitals. However, also do take note that transfer payment is not included in government expenditure because it does not represent the purchase of goods and services. Last but not least, we shall be looking at the fourth economic sector, which is net export. Net export is basically the difference between the value of export and import. So, in summary, we can calculate the gross domestic product, which is GDP, by using expenditure method, which includes adding up all the four items I have mentioned just now, which are C. Personal consumption, I. Investment, G. Government spending, and last but not least, net export.
So hi, next I will be explaining on another method to measure national income, which is income approach. In income approach, national income will be measured by adding all the various types of income paid to the firm and household in the form of wages and salaries, rent for land, the interest for the capital, and last but not least is the profit to the entrepreneurs. And also, in the income approach, all the figures are only in fact cost because it's only earning of factors of productions can be calculated. So here is the major income components of national income, which are total wages and salaries, net interest, rental income, and last but not least is profit.
Next, I will be further explains on the major income components in national income, which firstly, wages and salaries. Wages and salaries are the income received by labor from the firm for services rendered. And the income also include fringe benefits such as social security or pension fund contributions. But before I move to the next components, what is the difference between wages and salaries? Basically, wages are usually calculated by the number of days the person has rendered service. Meanwhile, for the salary, it typically defines a fixed amount your employers pay you and not necessarily for the specific hours worked, but for completing the duties of your job. Next, major income components in national income are net interest. Net interest is the difference between total interest payment received by household for borrowed funds that finance investment purchase and total interest payment made by household on their own borrowing for investment purposes. Thirdly is rental income. Rental income is the payment for rented inputs. The suppliers can earn an income from supplying land and building for the use of others. And also, rental income is any payment you receive for the use of occupation of property. Expenses of renting property can be deducted from your gross rental income. Thus, you generally deduct your rental expenses in the year you pay them. Last but not least is profit. Profits basically refer to corporate profits earned by business corporations or payment of dividends to shareholders.
So here we can see that in the income method, gross domestic product (GDP) is calculated by adding up all the items of income which earned from the factors productions.
The following are the formulae to calculate national income and disposable personal income using the income approach.
So next, the last method to measure national income is by product approach, which is also known as output approach and a value-added approach. Under product approach, national income is measured by net value of all final goods and services produced by a nation during a year. So in calculating gross domestic product (GDP) under the product approach, only the money value of final goods and services are included in the calculated. This is because the raw materials and intermediate goods are subtracted from the value of gross domestic product (GDP) to avoid from any double counting. In Malaysia, there are three sectors contributing to the progress of gross domestic product (GDP), which is firstly the primary sector, secondly the secondary sectors, and lastly the tertiary sector.
So here we can see under the product approach, to get the gross domestic product, we have to add all the final products from all these three sectors.
So here, we can see that in the product approach, the method of measuring national income is totally different from expenditure approach and income approach.
Next, I am going to discuss about 5 uses of national income statistics. So, firstly, it helps us to compare the standard of living of people in different countries. So, for example, countries with a higher national income such as the USA, the UK, Canada and Japan have a higher standard of living, while countries that have a low national income such as Myanmar, Vietnam and Cambodia will have a lower standard of living. So, secondly, national income statistics is being used to measure an economy's performance from time to time by doing a comparison of the national income over a time period to another period of time. So, it tells us if the economic performance of a country is growing, stagnant or declining. For example, the national income of Malaysia has been improving steadily from time to time. And then, thirdly, it is very important for the government as it can be used as a tool by them for national planning to formulate the short-term and long-term economic planning. Without knowledge of the trends in national income, the government cannot formulate any economic planning. Also, national income statistics can be used to forecast future developments based on current economic performance by the government. For instance, the government of Malaysia uses national income statistics to draft the country's Malaysia's plan for a 5-year period. Next, national income statistics can be an important tool in macroeconomic policies and analysis. So, national income estimates are the most comprehensive measures of aggregate economic activity in an economy. With national income estimates, future economic policies for development of a country can be formulated. And then lastly, it is used for the public sector. It contains the numbers of consumption, savings, investment, imports and exports. These numbers help us to know the performance between the public and private sectors in the economy. So, the pattern of expenditure can help us to know the type of economic system that the country is practicing. If most activities are performed by the state, then the public sector is playing a dominant role in a centrally planned economy.
So now guys, we will proceed with the 5 problems encountered in calculating the national income. The way to calculate the national income is very complicated and needs a lot of hard work because there are several problems that happen to be encountered when calculating this income. Firstly, the main problem is the non-monetized sector. Non-monetized sector is usually arise in the most third world countries such as India, Myanmar and Cambodia. The existence of a large number of non-monetized activities in the countries, especially in the agriculture sector, makes the computation of the national income become more difficult, which means a large quantity of agricultural output in this country does not reach the market and it is consumed directly by the farmers or exchanged for goods and services. The next is false information. False information given by the citizen of the nation also makes the calculation harder. The citizens tend to give inaccurate information regarding their income in order to avoid paying a higher tax. This also includes transactions involving illegal goods, services, such as trading in harmful drugs, gambling, and prostitution. Furthermore, the illiteracy problem is also the difficulties encountered when calculating the national income. Most people in the third world country tend to face such problems due to being restricted to education. Therefore, they are more likely to have low reading skills due to being poor. For example, the majority of Indians are illiterate and they do not maintain any records of their products' production and sales. The first problem is double counting. Double counting is usually associated with the product method. Double counting refers to the probability of the product, such as raw material or labor, being counted more than one in a national revenue. For example, in the production of a dress, we need cotton which costs 2 ringgit. The cotton is processed to form threads which cost 4 ringgit, and these threads are woven to form clothes worth 10 ringgit. The dress is made of clothes and sells at 80 ringgit. But if we calculate the price at every stage, its money value will come to 34 ringgit. But the actual increase in national income is only 80 ringgit, which is the price of a dress. Lastly, the difficulty in national income is the problem of multi-occupation. Problem of multi-occupation is due to many people engaging in part-time jobs which are not included in the national income. An example is that a full-time employer in a company who earn a fixed income but still sells burger at night. The income from full-time job is included in the national income, but the income from the selling of burger at night is not calculated at all. This is due to them not claiming it as their own income, and they have no proof of the income itself, such as salary slip. So, that's all the 5 problems encountered when calculating the national income. Thank you.
Ba 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 banana. Ba 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 banana. Oh, ba 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 banana. Potato, Rica, Nima, Roma, Nica, Notica, ba 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 ba.